Testing, testing, 1 2 1 2, testing 1 2. We'll do a quick sound check. I'll just quickly grab the text box. Good evening, everyone. How are you? Hopefully, you can see my spreadsheet there. Yeah, fantastic. Excellent. Alright, guys. So volume's good, pitch is good. We're away. So, thank you for joining me. What we're going to go through tonight is we're going to have a look at how the systems have performed this week, or last week I should say. We'll do a review of week 17. We'll do a little bit of a look at our top systems as far as our top 10, what's been tracking nicely. We'll have a look at one of our new systems, which is the Fortress Swing Trader, and EC15, which is one of Clyde's systems. We'll also spend a little bit of time going through the pin bar reversal. So the next couple of weeks I'm going to be doing a lot of training on the price action strategies, just going over those again. So I'm going to record this session primarily for the pin bar setups that we go through tonight, and that way, as you start to do more of the training and you eventually get the strategy, it'll be very, very obvious to you what are the pin bar setups, how to basically identify them, and some of the things that we want to do to hit the high probability setups. So as I mentioned before, this is one of probably about 5 or 6 different price action strategies that we're going to release to you guys, and it's part of that ongoing development. So let's jump in and have a look at our top 10. I've got through 3/4 of the way through the spreadsheet. I've got a few systems to update here. I'm doing a little bit of optimizing for a couple of the strategies, so I'm probably going to make some changes on Sunday to some of the systems. But I'll be basically, if I do change a strategy, I will be putting in optimized, and then this will be week 19. So we're in week 18 at the moment. If we optimize the strategy, it'll be for week 19. So let's have a look at how things are going. At the moment, we've got the two Clyde Pen 2 systems out in front. The gold systems had a fantastic week. Those two systems there did really, really well. What was great to see was that the failed trend strategy pulled some nice profit on crude also. If you were tracking a multi-system strategy on crude, you would have noticed that crude has had a pretty good week as far as the multi-system. So if we just isolate crude, the market, let's do that now. You'll see that our crude systems were really good, except for the Pen 13 and FT77. Now this is one that I'm going to recalibrate as well. So I'm going to kind of play with that a little bit. That was the one we originally put out for the failed trend, and then Nick came up with a better strategy on the failed trend on a 1 minute. So this one's trading on 1,000 tick, the other one's trading on a 1 minute. This is really, really good. So if you haven't had a look at it or haven't had a chance to download the strategy, I would definitely do that, because it looks really good as far as performance. I'll update those other crude systems. But you can see there we've got a lot of systems here on crude now, so that's we're building that up nicely. Now, if we go back to our strategies here, we'll go back to. You can see that if we get rid of that and just go gold, you will notice that gold has been very good to us this week with some really good performing, couple of good performing systems there. The T44, which is just a kind of consistent one as well. Not as much risk obviously in that trend trader, but a really good strategy. And what it means is that we're actually getting a nice little cluster of trend trader systems. So as I start to load this spreadsheet up and add more and more systems, we're actually getting a nice, for those of you who are just really primarily wanting to trade the trend trader or the trend trader elite, we've got a good little cluster here. And you can see there with a bit of momentum and a bit of volatility, it's been a good week all round on last week on the trend systems, so almost 2k there. That's without me updating the Aussie futures, which you'll know that has had a bit of volatility, and I've got to add in SN440 as well. So what I'm basically doing at the moment, and I'll just grab this Dropbox up here. Let me just grab that up. I'm going to what I've started to do is you'll notice, we'll go to my file here. If I go to Dropbox members, as I go through and update the week, which is week 18, I'm actually adding in the top 10 now, and I've got a second tier of systems, and then I'm also putting the systems in their individual strategy folder. So if you happen to be wanting to identify a specific folder, then you can kind of jump in and have a look at that as far as the strategy, and look at and have a look at, like, there's the Clyde systems there. You'll see that our cycle trader, I've got to add some more systems in there. But this is a great way if you're wanting to explore what's available within each strategy, and what are some of the high performance systems. Well, this is where you would jump in and grab some of those workspaces, the Fortress Swing. There's plenty that I need to add in here, so you'll see that there's lots more being added in all the time. The momentum, I've only added really the top 10 in that second tier in there. So as we kind of move more systems over, and I get more systems sent over, because I've got a number of DAX systems to add in as well. So there really is we're getting quite a good cluster of strategies together, which is fantastic, and that we'll continue to monitor. And then I'll set up our pin bar folder and other folders. Now that's okay for TradeStation. I'm going to do the same for MT4. I've actually just recruited another coder for MT4, so we're going to have a couple of coders working for us now. So that means that we'll be churning these systems out a lot faster rate, so we should start kind of releasing those fairly shortly. So I did mention that we've got a couple in our folder at the moment in Dropbox, but we're going to have a lot more coming our way, so which is great. That's what we want. So we want to eventually get to the point where we've got an equal number of MT4 systems, multi-charts, and TradeStation systems available. So at the moment we've probably got about, say, 6 to 8 systems on MT4, and we want to get that up to match what we have in TradeStation. So that'll be great. Now obviously the price action systems are primarily being coded in MT4, but also in TradeStation. So, and anything that we trade in anything that we code in TradeStation, we can use in multi-charts as well. So as we start kind of putting that multi-charts folder together, you'll see more systems evolve in there as well. Now, so Platinum Members 2016, you'll see we've got our library, and this is where you want to go to your top 10. Week 18, that's where all our systems are uploaded. But as I mentioned before, within the library, you've actually got your individual systems. So TradeStation library, that's where I'll be dropping in the workspaces for the individual systems that are performing really well. So you can kind of jump in there and have a look at those. Now, as I mentioned before, if you've got systems that you think are really good and you want to share them, or you think that they're worth having other traders having a look at, or you just want to share them generally to get some feedback and you're happy to share them with a group, that's fantastic. That's what we want. We want, I mean, the more that we share the systems around, the better results we're going to get. It's going to mean that we've got much more systems available to for us to kind of tap into, and it means that you're leveraging the time of the group, aren't you? You're not just relying on your time to create a system, but if you decide that you want to add something else to your portfolio, then you can just quickly glance in the Dropbox and find something that's suitable for you to add to your portfolio fairly quickly and then customize it. So that's what we want. Now, a couple of updates here. As I said before, I'm going to do a little bit of work on FT77 because it's looking fairly ordinary. You can see the days of the week. Even without looking at the data window, I can see that we've got some fairly ordinary days of the week. So we'll kind of explore that a bit more. I'll do some work on that. I'm going to have a bit of a look at this Pen 28, the silver strategy, because that isn't kind of an equity curve that we want to see too often. So it's profitable, but it's a bit of a roller coaster. So we'd like to see that a little bit smoother, similar to FT88. Now this one here is one that Nick was talking about, or Nick sent through. As I mentioned before, it's just doing really well. So another solid week last week, and hasn't had a fantastic start this week with a negative 504. But you can see there that it's not going to trade much. So on the rare time it trades multiple times, it can have between 2 to 5 trades. So if you are looking for a little bit of activity, then you can get that in this system, but generally it's around 1 to 2 trades a week, which isn't too bad. And our max risk there is about 504. The max drawdown on this system is about it's $1,000. So, and its max intraday peak to valley is 1882. So it's really one of the smaller systems that, or one for a smaller portfolio, which is unusual for gold because a lot of the gold systems tend to have a larger drawdown. The other advantage with this strategy is it's trading both sides of the market, and it's fairly close as far as longs and shorts. So this is definitely it's a good little strategy. It's got slippage and commission in there, so it's featuring in our top 10. We'll just quickly pull that up. We'll grab our gold and we'll just unselect the specific Clyde. There it is there. It's sitting in third place, and really, as far as risk, it's probably one of our best systems at the moment. So the good thing about it, what else would you say would be a good thing about the actual system itself? Because one of the challenges we have is we can come up with momentum-based systems or trending systems or systems that trade on volatility, but sometimes this counter trend or failed trend system is a little bit harder to develop that's consistent. So if you can put together two of these strategies where you've got trend and momentum working together in harmony, then that's a fantastic combination for a market. So they're two nice opposing systems to have running together. So if we have a look at crude, that's on. Let me just go back to that. Sorry, I said gold. It is crude. So let me just change that there. I've been looking at gold for the last couple of hours. So yeah, it is crude oil. If you do have a couple of strategies, and we've got our T16. So T16 is a trend trader strategy. That's on a 89 tick. So remember that only trades at a certain time of the day. It's only for about 15-20 minutes. Then we also have our Fortress strategy, which is also a breakout kind of momentum system. So we basically have a couple of nice little options there as far as strategies on crude oil, and ones that we want to kind of put a little bit of attention towards, because that's a nice combination, having that failed trend, Fortress and momentum. The thing I was kind of alluding to before was I was kind of thinking about gold, because gold's got a cycle trader system that's actually working quite well. So if you can add in a cycle trader, a cyclical type strategy with your failed trend, reversal and pin bar, you're basically starting to cover all phases of the market. So when the market isn't breaking out or isn't showing a lot of momentum, then you could potentially pick some nice price movement up on a cycle type strategy. So guys, that's our top 10. We've got the two gold systems, that 1 minute crude chart on the failed trend, the Trend Trader T16, Fortress 21. So this one here is a very short-term strategy. That one is trading longer hours. Obviously, you've got Momentum 11, which is our gold system, needs to kind of step up a little bit, but this, the small losing weeks again, not trading outrageously frequently, but trading enough to keep you interested. And then you've got the bonds and Pen 17. So uh, the we're just going to keep an eye on this Pen 17. So the biggest challenge for us when we're trading and when we're running these systems is what? What's the biggest challenge when we run? And you'll see it you'll see it over the weeks. There'll be weeks where this cluster of 20 or 30 systems will have a negative overall result. But our biggest challenge is to make sure because remember that we're trading the market, so it's the market that's dictating the environment that we're in. So what's our challenge that we face? Because remember, if we put together a system that is trading both longs and shorts, then we're ultimately going to experience at some point a bias in the market where it's aggressively long or aggressively short. We do our best to make sure that we filter out those particular days or weeks, but those days, weeks can turn into months. Like for example, crude oil was aggressively short for 6 months or so, or even more. Now, it was very difficult to find a long strategy on that market. So if you're going to be trading that market, you've got to trade the environment that you're presented with. That's the obvious scenario there. So with our methodology, we're always being objective. We have to objectively backtest what our strategy can do to find our edge. We have to then be able to qualify and quantify what our edge is based on the environment that we've tested, and then we need to make sure that that environment is replicated going forward. If that environment changes, then our system obviously needs to change, doesn't it? Because we can't change the environment. That's going to be something that we have no control over. So we have to then be able to be good managers and manage the environment that we're in. And the way we do that is we've got the skills to be able to do that by either re-optimizing our strategy for an increase or a decrease in volatility, or potentially having a circuit breaker where we don't trade that market because our system isn't designed for an increase or decrease in volatility or a distinct bias. So if you've developed up a system that is trades both longs and shorts, and you suddenly find yourself going into a fairly big drawdown because one side of the market, one side of your strategy is losing more than the other's making, you need to decide whether you're going to trade just one side of that strategy, or you're going to turn the system off. So that's where you're at. So basically, anytime you're running your portfolio, you're always looking at what your bias is for the market, what the market environment is, because that's really what's driving your performance on your systems. So so that's obviously the thing that we want to kind of be considering all the time. And you'll see that as we look at the strategies and we look at the performance of the systems, we're going to get like Pen 17 times when, all right, well, it may be time to turn that strategy off. So, or we get a flat period where we're getting some good volatility, or we're not getting as good volatility. And even though we're not making or losing money, we're actually chipping away at our average trade net profit because we're still trading and we're getting hit with commission and slippage. So you've always got to be on your toes as far as, all right, how well is my system performing, and do I need to substitute my system out because it's not giving me peak performance. And that's not about cherry picking, is it? Because we can all we can all develop a system that runs over 2 years that trades both sides of the market, that has a good average trade net profit. But what's it going to have if I run a system, say, for example, on crude oil? I'll pick crude because everyone is fairly familiar with the crude market because we all fill our gas tanks up. We know what the price of crude's been over the last 2 years because we're watching it based on the fact that it's such a precious commodity at the moment. What would happen if I develop a strategy over a 2 year period that is trades both longs and shorts? What generally will you notice would be the first thing that you'll notice in that strategy if it's got a good average trade net profit and it's got a reasonably good profit overall? What would you notice would be something that would be a bit of a concern to you? Because the reason why I'm talking about crude is because it's got such huge swings in, it's had a big bias long and short. So what would if you've got a market that has a big bias long and short, what would that typically affect in the strategy? If I'm looking at the performance report of a strategy and I know that I've got a bias, I've had a big bias on a system I'm testing, what generally can't I avoid in a system I develop over a period, say of 2 years or even longer, that has had strong biases in the market? What wouldn't I be able to generally avoid? Yeah, the bigger drawdowns. That's what I'm looking for. So we got there. So even though your system typically will make money, you can try it yourself on a number of systems, but you'll find that that's gonna come with larger drawdowns. I've seen it over and over and over again where traders tried to put together a 5 year track record or a 3 year track record on one system, and they try to match a system with multiple market environments. Well, the reality is that you can't use the same system in every environment. It just doesn't work. So what we then do is we go to a point where we're trading horses for courses, and John Sweeney kind of describes it nicely within campaign trading, that trading's a campaign, and that you're putting together your campaign based on what the environment is that you're trading. So that's what we're doing. And with our development of our price action systems, which is a nice segue into our training for price action, that's one of the things we're going to be doing. We're going to be finding out, right, well, we're going to identify the market that we're in. So the phases of the market. Are we in a trending market? Are we in a consolidating market? Are we in a market that potentially is ready for a reversal? Are we in a market that has gone through a massive trend and now is in a period of consolidation and bouncing between support and resistance? Are we ready to break out of that support resistance for an explosive move either to the upside or the downside? What price action strategy would best suit us for that particular entry? And we've already got one that we use at the moment, which is our pennant strategy. So it's about putting together these systems so we can then apply either price action or our indicator-based strategies to a specific market. I'm going to move that over for a second as we kind of delve into our price action on our pin bar. Now, I've made a few notes on the screen here, so the reason why I've done that is because I don't want to kind of move away too much from the price action. I want to kind of start talking about and getting you familiar with what are the elements of our price action system and what do we need to consider when we're looking at a particular type of entry or a particular type of setup. So for today, we're going to have another look. We're going to revisit our pin bar trading. So within the pin bar system, or within this pin bar price action strategy, we're going to have the option to either trade a trending market or a non-trending market. So we're going to classify trending and non-trending by either using our moving average, which we've got as this moving average on our screen here, which is a 50. I'm pretty sure it's our 50, yeah. And we can either use a trending, so to identify whether the market's trending, we're using our moving average, or we could potentially use our pivots. So our pivot points, or our pivots, we can use pivot high, pivot low. So if we're making a series of higher highs or higher lows, if we're making a series of higher lows, what do we effectively have if we're making a series of higher lows? What kind of a trend do we have? I'll just set that as our default. Anybody? We've got an uptrend. So there's a few ways we can do this. Within your price action strategy, you're going to have the option to select what type of tool you're going to use to determine the trend. Because ultimately, when we're looking at what phase are you in, that's one of the big things we're going to have to identify before we even start trading, is what phase of the market are we in. So this is the first thing we need to classify. So that's going to help us to determine what environment we've got. So the phase is another word for describing the environment that you're in. So if we're in an uptrend, we've got higher lows. So that higher lows typically comes with the formation of a general uptrend. We can back that up with a trend line which has 2 to 3 areas of support as price starts to move up, or we can use our moving average where prices close clearly above the moving average and staying above that level, or that moving average. So there are several ways we can identify our trend. Now, with our pin bar trading, we're trying to identify either that we're in a trending market. We've already classified what we would consider trending. Non-trending is where we would use price action. And what else? What can we use to identify non-trending? What indicators, or not indicators, but what mechanism can we use to indicate non-trending? Yeah, so we can use the pivots, the moving average. We can use previous support, resistance. So so we can use our pivots to identify that we've got that consolidation point. Our pivots aren't really kind of moving from a certain level above or below where the previous pivot was established. We can use areas of support and resistance. So if we get a consolidation for support resistance like we have here, then we're starting to see a level where we've got that consolidation, haven't we? So when we get this consolidation here, that's where we're identifying a phase of the market. And then obviously the moving average is another way of, if you've got multiple crosses of the moving average, it means that price is kind of oscillating around that midpoint. There's one other indicator we can use for determining whether the market is not potentially trending, or what the environment the market is in. What would that be? Anything else at all? Our MACD-BB, if we've got price hovering around this zero line, this is another way of us identifying that we have a session of consolidation. So we might have, we can easily within our strategy identify a value above and below that zero line that dictates to us or identifies to us that we've got a consolidating market, can't we? And then when we break out of that zone, then we're in a trending market. So that's a nice way of using your MACD to say, right, well, that's my zone. My zone is so many points above, so many points below the zero line, and I'm in a consolidating market. So that's another thing we can use for that. So once we've identified the phase of the market, so trending or non-trending, then we're looking for a clear rejection of price. So the pin bar, by its very nature, is designed to, or the design or the interpretation of the pin bar is that we're looking for a rejection of a level. So what it typically has is it has a tail, which is this longer wick portion that is generally 2 times larger than its body. So 2 to 3 times larger than its body, and its body generally is obviously the smallest part of the candle, and then almost the smallest part of the candle apart from the nose. So the nose is generally fairly small. Then you've got the large wick area, and then you've got the body of the candle. So what we're generally looking at, and what's happening here in this example, is that, and what this is showing us as far as price is that we've had a bullish candle here. So a bullish candle is when we open or close higher than we opened. So that's our bullish candle, and generally within TradeStation you'll see the bullish candles are in green, the bearish candles are in red. So our bullish candle is showing you that we've opened or we've closed higher than we've opened, and then the opposite happens to our next candle. We've closed lower than we opened, then we're back to a bullish candle, and here is where we see another bullish candle, but we see a rejection point, don't we? That rejection point is that value there at the very high point of that candle, where it tells us that at 115.63, sorry, 115, I'll just line that up. 115.62. We had price push up to that point, but they couldn't be sustained, and the bears pushed that price back down, and we ended up having a failed bullish candle there, and then we get that pin bar setup. So the pin bar setup is really a price action candle that allows us to look at a possibility of trading in the opposite direction of the tail, so the spike. So what we're looking at really is within any entry that we're kind of assessing as far as a potential entry, we need to see that failed attempt to break out or to push higher, or for price to push higher. But we're wanting to see that not just in isolation. Would we take a pin bar reversal just purely because we see it on the chart? Like if we graphically see or visually see a pin bar reversal, do we automatically say, right, well, every pin bar reversal I see, I'm taking because I know they're a high probability setup? Is that actually a true statement? Obviously, we need to test that as far as doing an objective assessment, but that's definitely not the case. Pin bar reversals are fairly common on charts, but what we need to see is something called confluence. We need to see a situation where we're looking for clear rejection of price, but we need high probability pin bar setups, and those high probability setups need to come with a number of different elements for us to take a trade. So we can't just jump in and say, right, well, we're taking every pin bar, this is easy, I'm going to code up that every time I see this candle pin bar setup, bang, we're in a trade. Trading in the opposite direction of the wick. Remember the wick or the tail? That's our catalyst for the trade, and we're trading in the opposite direction. So if I put this on my chart, what I'm looking for is these things to be in confluence with my pin bar candle. So I'm looking for either one or multiple of these things to be happening for me to take a trade in that opposite direction of the candle or on the wick. So I would like to see price getting near a key level. Now, key levels are are synonymous for areas of support resistance. You know, that challenge between the buyers and the sellers where we often get rejection points. So rejection points are typically around that key level, and that generally can be the case for the currencies and obviously for the commodities as well, or futures. So ideally I want to see, not always, but I'd like to see key level. If I don't see it, that's okay, but I need to see something in addition to just the pin bar reversal, previous support resistance. So this key level may be substituted with the fact that I could get previous support resistance where prices hit a point. As you can see, it has here, and then wow, it's hit it again there. So that gives us that extra, you know, that's starting to develop our level of resistance. So we're struggling to get through that 115.63, and price is getting turned back again. So that gives us that confluence we're looking for, that previous support or resistance. There's our previous resistance. The Fibonacci retracement. So if you've used Fibonacci levels before, the key numbers that we're looking for are 23.6, 38.2. The really big one is the 50% level, and then obviously for a deeper retracement, 61.8. So to draw the fib level, what we're doing is we're picking our highest equity point, or our highest point on the chart. And once we're tracking this, once we pick a point where we see price start to float away, then this is starting to become our initial move, our kind of wave one move, or our initial move down. Then what we're doing is once we get a swing low, which we have a swing low here, so that would be our first point where we're measuring our retracement. Once that's broken, then we have a new swing low. So the Fibonacci levels are measuring swings in price action. So what we're looking for is we're looking to measure, all right, well, from this, our highest equity point in this recent move to our lowest equity point, where is our retracement in price? How far is our price retracing on our Fibonacci levels? So I'm not going to go into a lot of detail on Fibonacci tonight. I'm going to kind of do another video on that and really kind of jump into Fibonacci trading and that, because that's going to be a big part of obviously what we do with our price action. But this is one aspect of our confluence, our looking for our combination of not just the pin bar, but our additional level of confirmation for our trade. So what we're seeing here is, and we've already got a strategy, the Fib Trader, that plots our Fibonacci levels. So once we get our furthest price point, we've got our 2 price points, we can use our Fib drawing tool here to mark our starting point, our lowest pivot point, and then that's going to track our retracement. Where is our retracement, and how far, you know, what are we looking for as far as a possible retracement point? Well, obviously these key levels are 23.6, 38.2, and 50 level, the 50 level. If we get a failure at any of those levels, now coincidentally this level here is just below our 50 level where we're failed, but you can see price has really failed to break through that 23.6 level. So we've had what we call a failure at that initial point, that initial fib point. So that's a great catalyst for us to, right, well, this potentially is a takeable trade. Now we need to work out how we're going to enter this particular trade, and do we have a higher time frame confirmation. So we would potentially look at higher time frames as well. We might look at a 15-minute chart, and we might also look at our hourly chart, and you can see our hourly chart that here's this rejection point on our hourly chart up here, and there it is here on our just above our key level. That was our starting point on measuring our fib. What do you notice on our hourly chart that sets up beautifully on this Euro USD? What's clearly showing here on our hourly chart for the starting point of this move? I'm not talking about the actual retracement from that support area, but there's a higher level pin bar. So if you're running your scanner, which you're going to be able to do as part of the price action system, you're feeding the timeframes you want to have on your chart and what it's referring to. Because remember, currently within our strategy we have the higher time frame filter, so we're going to use that same concept to run these pin bars. So we're going to have a look back period for a pin bar, and quite clearly you can see the 60-minute sets up a nice pin bar reversal. What else do you notice as far as an area of confluence here? What else do we have on this pin bar that that makes us pretty excited about the fact that we've got the pin bar set up? What else do you notice? That key level, that's it. The key level is a nice rejection point. Now there's one other thing that we want to kind of make a mental note of here. It'll be in your training as well. There's no recent price at this level, so you can see that now there's something that Clyde refers to as recent open country. We talk about it in the VM videos where we talk about recent open country and recently traded price range. When you don't have price in recent price action, so to the left of your pin bar, any pin bar that you're looking at, if you don't have recent price action, then that's a really nice little additional point of difference as far as a pin bar. We also have obviously resistance. So that little bit of information, and then that becomes then a catalyst for our entry, doesn't it? Because if we don't trade in this recent open country area, which we don't, then as soon as we break our trend line or our moving average, so if we draw a shorter term trend line, as soon as we break that trend line, what is that a catalyst for us to? That's our catalyst for taking the trade, isn't it? Breaking the trend line or breaking through the moving average or breaking through support. So there's three ways we can really use our entry point. We can use our entry point as previous support resistance. We could use our trend line as a breakout, or we can use our moving average. So there's three ways in which we can get into the market. What would invalidate this pin bar would be if we traded in this area here on this pin bar. That would mean that then we've broken that potential pin bar setup. So we don't really want to see price trade in this range here. So if we go to our example here with our pin bar, we definitely do not want, if you have a look at this pin bar, the left side is open. We don't want to see it's recent as in the last 4 to 5 bars. What we don't want to see in here is we don't want to see price trading in this area here. We want to see price action fall away from the pin bar. So the body of the pin bar. Does that make sense? And that's what we're looking at. We're looking for, now, this is our reversal trade setup. And is this the counter trend trade, or is this a trending setup? So would this be a reversal or a continuation trade? It's counter, it's a reversal, isn't it? But if you have a look at so that pin bar on the 60-minute gets us into the trade for the reversal. But what setup is this one here? What setup do we have here? Is this a reversal or is this a continuation trade? Yeah, it's a continuation, that's it. So quite clearly we want to make sure that when we're taking our setups, we've got to get our handle on the different types of setups, whether they're continuation or reversal strategies. That's fairly easy. We need to be able to identify the phases of the market. Again, that's fairly easy because we've got a way to objectively do that. That's going to help you eliminate a lot of your trading when there's not that volatility in the market, because quite clearly if we have a situation where we don't have this higher highs, lower lows, or we don't have this clear trend where we have, if we have the metrics built into our strategy where it's either the MACD or the moving average or potentially the support resistance or the pivots, either one of those are going to eliminate a potential trade, aren't they? Because they're going to take us away from taking trades that generally are low probability setups. If I'm looking at a non-trending setup, would you say if we're looking at a non-trending setup, would a non-trending setup be a high probability setup or a lower probability setup based on or I'll rephrase that. What would be my better option as far as trade entries? Is my probabilities higher in a trending market or a non-trending market? Or is it too early to tell that because we haven't done any objective assessment? Because don't forget, when you get consolidation or non-trending markets that support resistance, you can get some fantastic setups where you get a nice bounce between support resistance and quite a good movement in price action. What would be one tool we could use within our GMT strategy to make sure that we're getting enough movement for a non-trending market? Anybody? It's in our failed trend, I'm pretty sure, and it refers to minimum price move or volatility. So we can use volatility or we can use our minimum price movement, can't we? Because we want to make sure that if we're running a price action strategy that has a reward, we ideally, with these type of setups, your ideal entry for this type of setup. Now, the great thing about the price action pin bar strategies is, where is your stop going to be placed? Where's your stops going to sit? Yeah, top of the tail. So you generally, when you're running these strategies, you're typically going to want to risk roughly around, you're going for 3 to 1 in most instances. So 3 to 1 would be your minimum. You'd be wanting to risk, say, 20 pips to make 60. So I'm always thinking, for a pin bar reversal, your risk to reward is 3 to 1 as a minimum, and you're looking for better if you can. So these strategies should always, depending on the layer of confluence, should have a higher probability setup, and they should have an excellent reward to risk. That's what we're looking for. So what we then need to do is qualify, right, well, what are our pin bar setups? You've got your consolidation setup, you've got your continuation setup, you've got your reversal setup. So following a significant move or a significant price move. So there are a number of ways we can trade the pin bar reversal. Even within our scope of our brief here, we've got market trending, so we've got a reversal there. We've got a non-trending market, and then we've got our continuation, which is our trending market. So we have about 3 or 4 different setups for the pin bar reversal. So it's about getting and making sure that whatever setup we're kind of trying to hit, that we've got as much of this confluence as we can when we're looking at our setup entries. So traders, that's our pin bar reversal. I'll be doing a lot more videos on the pin bar reversals as well, with different markets that we're looking at. There'll be a fair emphasis on the Forex market, but we'll be looking at crude and gold and a couple of other commodities and indexes. But yeah, we'll be doing a lot of the Forex analysis as well. So typically is where the pin bar strategies and the price action strategies do really well as well. So guys, thank you for your time. Have a fantastic rest of the week. As I said before, we will actually be, I'm going to send out an email tomorrow about the Sunday training. I want to do a Sunday training session. I just need to get some good numbers there. So if you, when I send the message out, the email out, if you can just confirm for me that you're keen to do the Sunday session, and that way I can do a bit of a tally. Just so it'll be a to be confirmed as far as Sunday, but ideally I'm going to run the session at 8 o'clock, 8 a.m. on Sunday morning. I know it's a bit early, but I'm just struggling to get a time that suits everybody, that's all. But I have recorded today's session, so I'll be loading that up as well. That'll help for our training for the pin bar reversal. There won't be too much of a difference. I've already started the coding process with our MT4 guy on the pin bar for the strategy, and there won't be too much difference between the two systems as far as TradeStation and MT4, because the same person will be coding it, so that all the inputs will be the same, so that'll make it nice and easy. If you are trading both TradeStation and MT4, you'll find that's nice and easy as far as the tracking exactly what we're doing. But that is the pin bar reversal. We'll do more individual isolated setups as far as the continuation, the consolidation and the reversal entry. But that's about it for tonight. Thank you for your time. As I said before, I'm really looking forward to finishing off this strategy and getting it out to you. This is probably one of my favourite, going to be one of my favourite systems. So I'm sure you'll be excited to be using it. And also too, we've got our inside bar, outside bar, and there's a couple of other things that we have that we're going to release as far part of the price action strategy. So yeah, looking forward to it. So thank you for your time. Have a fantastic rest of the week, and we'll catch you hopefully on Sunday if you're available. Cheers.